Signs of an economic recovery today as November durable goods orders rose and weekly initial jobless claims fell. John Lonski is chief economist at Moody's Capital Markets Group, and there he is, live from his office in New York. Thanks for joining us, John.
Well, thank you.
So let's break down the data we got today. Transports, how positive is today's durable goods report?
Quite positive. We had gains of at least 1% across a number of broad categories, including high-tech equipment, and machinery and the like. We only had a deep decline for commercial aircraft, down by 37%, but that particular category moves all over the place from month to month. And of special importance would be yet another significant gain for new orders for non-defense capital goods. It's telling me that business investment spending is making a comeback, and if capital expenditures are rising, payrolls cannot be far behind.
Boy, that would be some well-received news. We want to hear that. Let me ask you, though, the durable goods read today, is that consistent with the current read on GDP and where you forecast it to be headed? What is it, 2.8%? They did revise it downward.
Yeah, but we think, for the fourth quarter, mostly because of a huge turnaround in inventories, we probably will get real GDP growth of between 4 and 4.5%. But don't run out and pop open the champagne, because when you take out the change in inventories, what's left of real GDP or spending on final goods and services may rise by little more than 1%, which would actually be down from its 1.5% gain of the third quarter. We've yet to attain the type of growth by consumer spending that makes it feel like a full-fledged economic recovery. And such growth may not arrive until perhaps the second quarter of 2010.
Tell me more about this improvement in payrolls you're hoping for just from the earlier economic data. Of course, we had initial jobless claims last week coming in fewer than expected. So is that consistent with your outlook? Do you think unemployment has peaked now?
There's a chance that if jobless claims continue to decline, the unemployment rate formed a peak in October at 10.2%. During previous jobless recoveries, we had a situation where jobless claims first declined sharply, and then jobless claims would jump again. And it's with that jump by jobless claims during a recovery that we observed a continued climb by the unemployment rate. Well, since jobless claims peaked back in March of this year, they've dropped by something like 29%. While at the same time, we continue to see a rise by unemployment. But jobless claims are the leading indicator, and ultimately, jobless claims will give direction to both payrolls and the unemployment rate. So far, so good. Once jobless claims move under 400,000 on a sustained basis, material jobs growth will return.
And we'll certainly look for that. John Lonski, chief economist at Moody's Capital Markets Group. Thanks for your time today.